when reviewing your credit card statements, they'll generally request a minimum of 3 months. The bank is well within their right to request more than this, but standard practice will be looking back 3 months at any given point in time. And they'll want to assess all of your fixed expenses that you do have on your credit cards, as well as on your bank statements in general as well.
Sometimes your dreams are bigger than your wallet, and that's when you pull out the credit card. But today, we are talking about how credit cards can impact your mortgage application. Jason Lai is a seasoned mortgage professional and advisor at Mortgage HQ. Known for his extensive experience in the New Zealand property market with a keen understanding of financial challenges faced by home buyers. Jason is becoming a trusted voice in the industry, offering valuable insights on mortgage applications, financial planning, and navigating the complex world of home loans. Jason, how do credit cards can impact the limit and the borrowing capability of someone wanting an application?
Yeah, thanks, Danny. That's a great question. So, credit cards, personal loans, any kind of short-term lending or rather credit facility will have an impact on one's servicing in the eyes of the bank. It's actually dependent on the limit, not how much you actually owe at the point in time. The reason being is because just because you have a credit card, it means that you can actually draw on that credit at any given point in time. So how the banks view it is for every 1,000 as a limit, approximately 4,000 in serviceability. So if you've got a 10K card, or rather if you've got two 10K cards, that's about 80,000 that can come off your total serviceability.
Wow, that sounds like a big impact. So when you have a credit card and you're applying for a mortgage, is it better to cancel the credit card completely or just decide to use it more responsibly?
That completely depends on how one's using their credit card in the first place, right? But also at the same time, it does depend on the overall picture. For example, if you've got a really healthy excess income at the end of every single month, you may not even need to cut off the credit card, at least when applying for the bank.
Okay, that's good. So if you do have the credit card, what's the best strategy of managing the credit card and the expenses on it just before the application?
I would say best practices, use the credit card for what it is, but, ideally you're paying off the balance at the end of every single month before you start accruing interest, because it goes without saying, these credit card interest rates are often, anywhere between 15 to about 25% in some cases. So definitely want to try and steer clear from, reaching that point.
Okay, and then are there any positives of having a credit card on an application? I know that in the US, they always talk about, oh, your credit score and having a credit card could improve that. Is there anything similar here in New Zealand?
I would say that's more of an overseas sort of thing. In New Zealand, not so much. But the thing is, though, if you do have a credit card, and let's just say you're consistently, missing the bills, there's overdrafts in your account conduct because you're, forgetting to put money in the account for automatic payments, that type of thing, it will have an impact on your application, especially if you're deemed, a high risk applicant. For example, if you don't have 20% equity when you're looking to, purchase property for your home, that is, then automatically this is going to be a red flag, so to speak.
Okay, so it's slightly different here in New Zealand. So, okay, so if you do have one credit card or multiple credit cards, does it have a difference on your application on the amount of credit cards that you own and the different limits?
Not necessarily. You should be generally looking at the total limit. Although if you do have, for example, 5 credit cards, multiple different personal loans, and you've got maybe 10 different short-term lenders altogether, that probably wouldn't look so ideal as an applicant.
Yeah, 100%. So when the bank is looking through the, credit card statement, are there usually any red flags they will look for that could, directly impact your application?
If you're defaulting on your actual repayments and consistently making this a behavior, then yes, that'll be a red flag.
So how do they look through the statement? Is it specific things like in the past they were talking about Netflix and subscriptions? Is it still a thing that they look for?
Yeah, so when reviewing your credit card statements, they'll generally request a minimum of 3 months. The bank is well within their right to request more than this, but standard practice will be looking back 3 months at any given point in time, and they'll want to assess all of your fixed expenses that you do have on your credit cards, as well as on your bank statements in general as well.
Mm. So, if you cancel the credit card, can it actually improve the overall loan application or the amount that you can get?
In certain circumstances, we would make a recommendation to our clients to consider closing off their credit card if they are wanting to get a touch more lending, because as previously mentioned, it's the limit that does have an impact on your overall servicing. So sometimes it could be the difference between going for that property that you want versus maybe going for another property.
Hmm. On limits and balances. So if you have a credit card, let's say you have 20,000 limit, but you're only using 2,000 you balance, would you recommend them to do anything different in that case?
Yeah, I mean, you should, in my opinion, assess how much you're actually using across, say, maybe like a 3 month or 6 month average. If you find that you're actually only using up to 3 or 4 thousand per month, for example, but your limit is 20, 25 case or higher, which we've seen in some cases, you should certainly be open to the idea of reducing it. However, at the end of the day, it's a case by case scenario. So I'd say speak to your mortgage advisor, or speak to us, reach out to us and have a chat, and we'll let you know.
Okay. So finally, if a client has a credit card and they have, the possibility to pay it off, is it something that would benefit the application as well?
Potentially. It's a lot of case by cases in these scenarios. Sometimes with our clients, they may have, they may be just reaching the minimum level of deposit required. And so if they have enough servicing and they still have some, money owing on short-term debts, sometimes in these positions, it may not make sense to actually pay those down. However, in some cases, if they have a reasonably healthy deposit, they pay down these, short-term facilities, close them off, and may actually increase their overall position and help them get that property that they're after. So it really depends.
Okay, so I think the overall message here is it's really case by case. If someone is wanting to get a loan and they want to talk to you, Jason, what's the best way to get in touch with you?
Reach out to us on the pin comment or jason@mhq.co.nz, or give me a call on 022 622 0668.
Oh, you're going to be busy on that phone, man, just before Christmas. But thank you so much, Jason, for sharing your knowledge again with us today. And for you guys, please make sure you like, subscribe to our podcast, and I'll see you next time.
Financial